You have been conditioned to anticipate precision. That's where your pursuit is. You're not trying to be someone that pursues being right. Because at some point, being right is going to no longer be enough. And now you're not watching the market. You're not even worrying about being stopped out. You're not worried about making the money. You're wondering now, am I dying? Am I having a heart attack? Am I having a stroke? Because you've lost all focus. That's how all these things happen. That's the road and pathway that leads right to that. Some of you may never have that experience. It'll be far and few between. But most of you will have this. If you're trading with real money, it will happen. You will have an anxiety attack. You will feel like you're literally having a heart attack or stroke. And you're doing it to yourself. You're scaring yourself. Cut half the trade off. Stop better than break the even. And let it happen. Whatever's going to happen is happening. But walk away from the charts. The stop's there to do its job. The limit order will be there to get you out. Stop looking at it. And give 10 minutes for your body to regulate all the hormones. For some of you young guys or gals that never had that experience yet, you'll have a panic attack. It's just a high level of stress. You may not ever want to submit to it and call it a panic attack. It's just an anxious moment. But if you have racing thoughts and physical symptoms of wanting to pass out or stroke or tingliness up and down your arm or whatever, that's adrenaline. And you're sitting still. The easiest thing to do is just to take a quick walk, burn it off, exercise, do some kind of, physical exertion to burn that stuff off, and constantly tell yourself there is no emergency and everything's fine. And you self-talk yourself down from that, which is the reason why I teach you to self-talk in your journal. Don't invite that negative stuff, because if you bring the negative stuff in there, what you're doing is you're saying, I'm pursuing right. And right is not the goal here. Consistently profitable. And if you're only framing that in the context of right only, you're going to take trades that are going to be outside the parameters that your model is, because you're thinking, this is one of those times where it's going to move and it's outside the kill zone. And, I got time. I just think it's going to go up there, and maybe just get in there and push the button. And you know damn well doing it, you're doing everything wrong. So you're not going to be in there low stress. You're going to have a panic attack worrying about it. And you're not even going to trade it right. You're going to submit to the first 20 seconds of it, and you're going to be counting every minor fluctuation that goes against you, thinking that it's going to be the next tick before it runs 20 handles against you in one straight shot. Boom, you're stopped out. Not just a little bit stopped out. You're way stopped out. That's what your mind does to you. It tricks you. And if you trade like that, it's because you're over leveraging, too much risk, or you're trading outside your model, and you know it. And subconsciously, your analyst in you is saying you're doing things wrong. And retail Rick's driving. You've put the analyst in the back seat or left them at home, and you're shotgun with retail Rick, and he's had too much to drink. It's not going to be a good outcome. So your conscious will talk to you. And as you get more experience, as you get better at this, and you have more wisdom because you've been doing it longer, that voice will be a lot more comforting, and it'll guide you. And that's the thing that when you're asking me as students, how do you trust and how do you know that the market was going to reverse like that? How do you know that it's not going to go past that low? It's experience. The analyst is in me saying, these are those instances where it does this. You've seen this before. So here's what we do. This is what we don't do. This is what we expect to see. That is what? Predicting. It's not reacting. It's predicting. The trader anticipates. The analyst predicts. The gambler sits in the back seat and shuts the fuck up. We don't want to listen to the gambler. We're not giving the wheel to the gambler, but they're always going to be chatting. Yeah, but we could have bought more. You should have held longer. This one did better than that one. You bought the wrong pair. Shut the fuck up, Rick. It's hard to filter that out. The part of you that is always going to look for what you didn't do right. Because retail Rick is constantly looking through the lens of right. You should not have that in your trading at all. But you're going to have it as an internal wrestling match always. Because you're going to criticize yourself. And there's never going to be a bigger critical person on this planet than you are. Nobody could troll ICT harder than I troll myself. When I don't do what I'm supposed to do, I live that shit for years. Maybe it's not that way for you, but it's human nature for us to be judgmental with ourselves. And sometimes with mental illnesses, it can manifest itself in very toxic ways, either inwardly or outwardly. So it's important that you constantly be reminded that we're not pursuing being right, okay? It really is impactful when you go into your trading day giving yourself permission to not be perfect. If you're wrong, it doesn't mean that it's a failure. It just means you're wrong. And you can be wrong and make money. That's what a sound model does. How can you be wrong? How can you be wrong and make money? Partials. They work every fucking time. There has never been a partial that was taken in a trade that did not yield a gain or profit. It cannot happen. A partial profit is profitable. And you take that when it offers it to you. Then, if the trade doesn't go to your targets or target final terminus and stops you out on the balance, guess what that means? You were wrong, but you made money. Books don't teach that mindset. Educators don't teach that mindset. They've been doing it since I've been talking about it, but I don't mind being a trailblazer. That's why I'm here after all. Blazing trails for you all to ramble on behind me and then find your own trailblazing. But you have to know what you're doing. You got to know how to predict price. You have to know how to predict the future. I've said it many times, folks. It's in the name of what we're doing. We're trading futures. We're dealing with the future. Everything about what we're doing is predicting the future. But when you don't understand how to predict with a great deal of consistency what the future is likely to do, then I guess it makes sense for someone to have the mindset that your job is not to predict the future because we don't know how to do that. So therefore, let us relinquish the pursuit of anything like that and just adopt the alternative, which is let's just react. Let's react to it. Like a knee-jerk response when your doctor takes that little rubber triangle hammer and taps you on your kneecap and your leg involuntarily just kicks up. Every time I went and got a physical, I used to always try to force myself, I'm not going to move, I'm not going to move. Whoop, and my leg would jump. I'd be mad. I don't want to react to certain things. And unfortunately, because I'm bipolar, many times I'll react to shit that I don't realize I'm reacting to until I'm already revved up. And nobody can talk me out of it. They can't talk me down. It's just got to do its thing. But in trading, it's the only thing in my life that has been a means of talking, engaging, and being able to be the closest thing to normal that I can imagine as someone as a bipolar person. It's very difficult for me to stay balanced for a long period of time. And if I'm watching price action, all of my focus, all of my attention is on these fluctuations inside these candlesticks. And if I'm talking and providing a narrative, in my mind, when I'm doing the live stream, like the live sessions, I'm talking to you about it, I'm literally talking out loud the things that I'm thinking. Like that's exactly what it's like in my head. Look at the Twitter spaces. I don't shut the fuck up, except for catching my breath once in a while. That's what it's like in my head. Nonstop, every waking conscious moment, my mind is constantly going. There's never a period of quietness unless I'm meditating, and I'm only able to wrestle with 3 or 4 things then, not 500 of them all at one time. So price allows me that beautiful distraction, and my attention is there. And I'm literally talking to myself internally the very way you hear me talking over the charts when I'm doing the live streams. I'm just saying it vocally. I'm audibly making it come out of my mouth, whereas it's just in my head. I'm saying everything just like that nonstop. I'm looking for this to do this. I want this price to be here. I don't want it to go past this candle here. It can touch that. That is reading the tape. That's why I call it that. You don't need a depth of market. That's not reading the tape. That's looking at a gimmick. I'm looking at price. I'm reading price. I'm reading the minds of everybody out there looking at that same chart. Like Dr. Xavier. He goes in there and puts his little helmet on. He can get out there and get in everybody's head. That's what ICT's doing. When he's watching his 1 minute candles, I'm in all your heads. I'm the ghost in the machine. I'm in there hijacking shit. I'm in there overriding retail logic and being on the other side of what they're trying to do. I know what they're thinking when they're thinking it. I know where they're placing their stops. I know why they're going to move their stops, when they're going to move their stops, what they're hoping to see in terms of where price is going to go. As much as they don't want to say they're trying to predict price, they may not say it in the circles they hang around in, but they're trying to predict price. And I know what they want to see in price. And when I see what I know is likely to happen, and it's wrestling with that logic that they're holding on to, hoping with gimmicks and bullshit, I have a high probability trade. That's the ones I tweet. That's why they work. The things I tweet, those instances are exactly the very moment when retail logic is arm wrestling what I teach you. And it's losing. My shit works. That's why the things I tweet pan out. I don't just go out and tweet whatever comes to mind. I'm waiting for that moment where I have most of the things I like to see in my favor. And then it goes to script. Well, think about what you know now. Do that for a second. Think about what you understand about fair value gaps in 2022 model, how price goes to old lows for liquidity and above old highs for liquidity, and time of day when certain things form. You didn't know that shit months ago. Look how much more you understand now. Now try to think about how you that didn't know what you know right now, how could you understand yourself explaining your present understanding to how you didn't understand it then? That's the predicament I'm in as a mentor. You need to experience it. You need to see it. And knowing yourself, because you're the same person back then and here right now, which you have more understanding, you know that no amount of talking, no amount of jawboning about what it is and what it isn't, your ignorant self, before you've learned how to do what you know now, would never appreciate anything. Even if you yourself went back from the fucking future, you would be like, what the hell are you talking about? Because you weren't there day after day, week after week, for now, a couple months now, seeing it explained before it happens. You can't take that experience and articulate it. Words aren't going to reach far enough. It's because you have experience. So that's what I mean when I say, when certain questions are asked, How do you this and how do you do that? Experience, 30 years. And you're getting that experience every time that we spend time together. When you're looking at your own chart studying, you're getting that experience. You don't realize it. It feels so not infant, but it feels so insignificant right now because it's early in your development. Every time a baby tries to start to stand up, it hasn't been able to even stand on its own yet, but it tries to stand up and it falls over. Every little time it does that, it's incremental experience. And finally, one day you come home from work and your kid can walk around. It just happens like that. But it didn't just get up out of the womb and start running around. It's incremental. But you have to have patience. But you're not going to learn it fast. It doesn't happen that way. But the best way of doing it is seeing me explain it real time. And there is no gaming of TradingView when you're calling it real time every minute. Sorry. When you record your trades, entry, placement, management, there is no gaming that. It's what it is. I told you the boundaries of how far that we're going to reach for liquidity for CPI. And it dropped like immediate right down to the sell side. Went one tick into the level beyond it, lower, and then right on up. Pretty neat. That's the game I like to play with price action. When I know I don't want to trade it, I want to see how will my algorithm reach for price action? Where is it going to reach for? Where's the liquidity at? And when you see it like that, it's just fingerprint. That's all I'm showing you is that these things repeat because it's coded. It's written this way. And you see enough of it now to know that it's beyond coincidence. And it's something that you can do yourself. You can wait for these instances to see price do certain things to tip its hand to you. And you wait, just like smart money does. It waits for the market to tip its hand. It's not waiting for patterns to form. It's not waiting for indicators and averages to cross over. All that stuff is the opposite of what you're supposed to be looking at. You're waiting for a certain time of day of week, economic calendar, operating times, New York session morning, New York session afternoon, London session. And you're waiting for the market to tip its hand on where it wants to go. That's the draw on liquidity. But every single day, folks, listen, every single day, the market gravitates to buy side liquidity or sell side liquidity. And before it gets there, there is a fair value gap. That's always there. It's always there, folks. It's never going to be hidden from you. They're never going to fucking change the algorithm and remove that. Okay? It's not going to happen. That's not going to happen. There's always going to be people out there placing stop loss orders to get in or to get out of a trade. That's liquidity. That's necessary. That's fundamental to how markets are booked. You need another counterparty. And thankfully, just like P.T. Barnum said, there's a sucker born every 2 seconds. So it may not have been 2 seconds, maybe every minute. But the point is, there's suckers born all the time that want to come in here with their retail bullshit, harmonic patterns, Elliott wave horse shit, yin and yangs on their chart. All that stuff is a reason for them to do what? Push a button. That's the instigation, the cause for them to do it. And the effect of that result sometimes is lacking. You have been conditioned to anticipate precision. That's where your pursuit is. You're not trying to be someone that pursues being right. Because at some point, being right is going to no longer be enough. So what do you do to satisfy when you're right more times than you're not? How do you stay satisfied? You pursue excellence. Excellence in execution. Excellence in precision. Excellence in managing risk. You refine your craft to be razor sharp, always at the ready, dialed in. That is the pursuit. That is not, I gotta be right. I gotta be right. When you do everything correctly through your model, the output that you get from that will be easily referred to in hindsight as you did that right. Notice the difference there? You're pursuing something else as the goal. But by doing that, you get what it is that you're trying to do initially as a new trader given to you. You get it as the result. But your pursuit is not to be right. Your pursuit is to follow the model, the logic, the plan, price action, studying what it is that you're doing, and waiting for any kind of input through your watching of price or the experience factor that the analyst is going to come welling up inside of you, speaking to you through your conscience, saying, okay, we're in troubled waters. Okay, I'm feeling a little disoriented right now. I feel that this trade is questionable now. So I'm not going to sit here and waste any time, develop a panic attack. I'm not going to waste mental capital because there might be another opportunity. And if you're bogged down with this, you won't be able to see it. So how do you do it? Half the trade off. And if I can't do half, kill it. Done. Spend 10 minutes doing something else. How hard is that? It's going to feel impossible when you're in it. But you got to remember this lecture now. This is it. This is the standard operating procedure. This is your SOP when the shit hits the fan and you are now in troubled waters and you have lost the plot about the trade. You don't even know what you're supposed to be doing. Stop loss is a problem. The target's a problem. Holding is a problem. You don't want to get out. You don't know what to do. You're like a sailboat out in the ocean with no rudder. Wherever the wind takes you. And that could be scary. And it's justified for you if you lose sight of what it is you're doing and you're disoriented for you to feel that way. So the way you gain control, remove risk, half the position taken off, and leave the charts. Minimum 10 minutes. And I promise you, you'll be able to walk back with a fresh perspective and you're not going to be disoriented. And you might see something in the chart that says, you know what? Everything's okay. And if you get another fair value gap or something else that gets you in to add another partial, you can put back on the part that you just took off. Now, see what I just walked you through? I walked you through how to manage yourself psychologically and emotionally in a time when you will experience this with real money. I promise you, you trade long enough, you're going to have this occur in your trades. The problem is, if you have it frequently occurring or manifesting, you are over leveraging. That's the clearest indication that you're using too much size. If it's hard for you to hold a trade and you're questioning whether you should get out, that is always a factor with over leveraging. So dial it back. Go down one size less. And if you still feel that way, go down one size less until you find that sweet spot. In that sweet spot where you put a trade on, you don't care. It might be 2 contracts for ES. It might be just 1. And you can build a career on just that. You don't need to build it bigger than that. But once you understand how to pyramid, you can start with 1 contract. And every time it gives you an opportunity to enter, but not so close to your original entry that it makes it difficult, you can, like for instance, say you want to sell short the ES. You sell short at 4,000. Hypothetically, and it drops down, it pulls back into a fair value gap that's still bearish at 39.96. Okay, you can sell short 1 more there. It breaks down, goes into 87, comes back up to 90 into a fair value gap or a bearish breaker. You can add 1 more there. You're still trading 1 contract, but every one of these new pyramid entries is a trade in and of itself. And you gradually build up that way, but you're still a one contract trader. You're just adding more incrementally, one contract at a time. That's called pillaring. Where you're just adding one to the original position, one, whereas a pyramid is you put your biggest position on first, reduce it, your next entry would be on that, and then reduce that size and then take the next trade. That's a pyramid. That's how you see me do 6 contracts, 3 contracts, 1, and I'm at 10 lot. That's like my bread and butter go-to. That's the thing I'm reaching for. That's why 99% of the trade executions you see me doing that. Is it advantageous to do it any other way? It's just something that's just me. I can do less, I can do more. I like to have 500 hours per point, and 10 contracts on mini will get you there. But you can go in scaling in with 6, 3, and then 1. And every time I'm adding less while there's profit behind that one. So even if it moves against me, it's not a huge compounded loss. And to understand what I'm saying is, if you just go look at my examples I have on Twitter and the few I have on my YouTube channel, when I'm showing you pyramided position building, that is based on I already have equity in the trade, and I'm not going to risk that equity to a point where it's going to make me a larger loss if it goes against me once I have my full position on.